Hi and welcome to another session. In this session, we will learn how to write journal entries when a business purchases assets in cash and on credit. This is a series and it has 6 videos. In lesson number 1, the rules for debit and credit have been explained as per the traditional approach. When a business starts and owner introduces capital, how do you write journal entries for that has been explained in lesson number 2. This is the lesson number 3. In this, we will learn how to write journal entries when a business purchases assets in cash, through check and on credit. In lesson number 4, we will learn how to write journal entries when a business incurs expenses. In lesson number 5, we will learn how to write journal entries when sales and purchases transactions are made by the business. In lesson number 6, we will learn how to write journal entries when a business takes bank loan. In this, the format explained of the journal is that what is followed by Indian boards. In case you are studying in Cambridge, that is IGCSE or A levels, a separate video has been made for you. The link of that has been provided in the description box below. This video contains accounting formats. So I would request you to watch the video in the full screen mode as the visibility of the format is best in full screen mode. These are the steps that we would be following to record each transaction. These have been explained in detail in lesson number 1. So I would request you to watch that. In this video, we will be reading the transaction, following these steps to do our workings, and then finally recording them in the journal. So let's read the first transaction. On January 5, purchased machinery worth 25,000 by cash. So this is a transaction where the business is purchasing assets and is paying cash. So the first step is to read the transaction. Now we need to identify the two accounts involved. Machinery is coming in the business, so machinery is going to be the first account. And how are you getting this machinery? You are paying cash to buy this machinery. So the two accounts involved here are machinery and cash. Let's do the working. We will be doing the workings in this table as it makes the recording of transaction in the journal very easy. So in this format, first you have date, then you have accounts involved, then you have nature of account, then rule, debit and credit. This format is in line with the steps that I had shown you earlier. So if you want, you can make a note of those steps and then understand what we are doing here. So date is January 5. The two accounts involved are machinery and cash. Now machinery is an asset for the business. Therefore, the rule for real account is going to be applied to machinery. And the rule for real account is debit what comes in and credit what goes out. Here, machinery is coming in the business. Therefore, it needs to be debited by 25,000. Now, the next account is cash. Cash is also a resource of the business. It's an asset. Therefore, to cash also the rule for real account is going to be applied. Here, the cash is going out of the business. Why? Because you're paying this money to get machinery. Therefore, to cash account, you would credit the amount 25,000. Let's do it one more time. The two accounts involved are machinery and cash. Both of these are assets. Why? Because these are resources of the firm that would be used to generate revenue. Therefore, the rule for real account is going to be applied to both of them. Machinery is coming in the business. Therefore, it needs to be debited by 25,000. Cash is going out of the business. Therefore, it needs to be credited by 25,000. Now, let's record the journal entry. So the format for journal entry is first you have the date column, then the particulars column, then ledger folio where you write the number where this entry is posted in the ledger, then debit column and credit column. So the date is January 5 and the two accounts that were involved were machinery and cash. So the account that needs to be debited is always written first. So you write the name of the account followed by A/C, and then in this place you write DR, which stands for debit. So machinery account debit, and the amount is 25,000, which you will write in the debit column. For now, we will leave the LF column blank, as we're just learning how to record the journal entries in journal. Then in the second line, we will leave some space and write the name of the account that needs to be credited. It always needs to begin with the word to and followed by A/C. So to cash account, and in the credit column we write the amount 25,000. In the third line we write narrative. Narrative is a brief description of the journal entry that makes the journal entry more meaningful. And it always starts by the word being, and it's written in brackets. So here the narrative is being machinery bought by cash. You can choose to write the narrative in your own language. So January 5, machinery account debit, amount 25,000. In the second line, leave some space, then to cash account, and in the credit column, amount 25,000. In the line after that, in brackets, you will write being machinery bought by cash. You have to follow this structure whenever you are doing a journal entry. Now let's move on to the next transaction. The next transaction is where the business is buying an asset and is paying by check. So it is January 6, purchased motor vehicles of 8,000 and paid by check. So first step is to read the transaction. And now we will identify which are the two accounts involved in this transaction. So what is the business buying? The business is buying motor vehicle and it is paying by check. So one account is motor vehicle and the second account is bank. Whenever the payment is going to be made by check, the account name that you will use would be bank account. So the two accounts involved over here are motor vehicles and bank account. Now let's do the workings. So where you had done the workings for the previous transaction, in the same table you would continue. You would leave a line and then you will fill up these values. So January 6 is the date. The two accounts involved are motor vehicles and bank. Now motor vehicles is an asset for the business. So the rule for real account is going to be applied to motor vehicles, and motor vehicle is coming in the business, and the rule is debit what comes in. Therefore, motor vehicles account would be debited by 8,000. Now the next account is bank account. Bank is an organization or a business, and to accounts of individuals and businesses, the rule for personal account is applied. Therefore, to bank, the rule for personal account is going to be applied. And the rule is debit the receiver and credit the giver. Here, bank is giving the money. Now, this is the business bank account, which is giving the money to the person from whom we are buying motor vehicles. So, the money is going out of the bank. Therefore, bank is the giver. So, we will credit 8,000 in bank account. So the rule for real account is going to be applied to motor vehicles account. Motor vehicles is coming in the business, therefore it will be debited. The rule for personal account is going to be applied to bank. Bank is the giver in this transaction, therefore bank account would be credited by amount 8,000. Now let's record the entry in the journal. So where you had recorded the entry of January 5, you will leave a line and record the entry for January 6. So first you will write the debit entry, then the credit entry, and then the narrative. So here the account that had to be debited is motor vehicles. This would be followed by A/C, which stands for account. Then you will write the short form of debit, that is DR over here. And in the debit column, you will write the amount 8,000. In the next line, you will leave some space. You will first write the word to, then the name of the account that needs to be credited, which is bank over here, followed by A/C, which stands for account. And in the credit column, you will write the amount 8,000. So motor vehicles account, debit 8,000, and to bank account. Now this is the credit entry, and in the credit column 8,000. And the narrative would be in bracket and will always begin with the word being. Here the narrative is being motor vehicles bought by check. Let's move on to the next transaction. January 7th purchased equipment of 30,000 from MNZ Limited. In the previous two transactions, the business had bought asset by cash and by check. There would be certain times wherein the business is going to buy asset on credit and is going to pay that amount at a later date. So how do you record that transaction is what we would learn here. So we've read the transaction. Now let's identify the two accounts involved. So one account is equipment. Equipment is coming in the business. Now you're not paying cash or you're not paying through bank. You are buying it from MNZ Limited. So the second account is going to be of MNZ Limited. Now let's do the workings. Again, we will continue in the same table where we had done the workings. This is the rough work and it is going to simplify and help us understand how to record. You will leave a line and then you will write the date January 7th. The two accounts involved over here are equipment and MNZ Limited. Now, equipment is an asset for the business. Therefore, the rule for real account is going to be applied to equipment, and equipment is coming in the business. And the rule is debit what comes in. Therefore, equipment account would be debited by the amount 30,000. The second account involved over here is MNZ Limited, and this is an organization. The rule for personal account is applied to organizations and businesses, and the rule is debit the receiver and credit the giver. Here MNZ Limited is the giver of this equipment. Therefore, MNZ Limited's account is going to be credited by 30,000. So equipment, the rule for real account is going to apply to equipment. It is coming in. Therefore, equipment account needs to be debited. The second account is MNZ Limited. The rule for personal account is going to be applied to MNZ Limited. It is the giver in this transaction. It's giving the equipment to the business. Therefore, MNZ Limited's account needs to be credited by the amount 30,000. Now let's record the transaction in the journal. So you will leave a line and then you will record this transaction. So you're continuing the same format. So the date here is January 7. The account that needs to be debited is equipment followed by A/C, which stands for account, and the word DR, which means debit. So equipment account debit, and the amount is 30,000. In the next line, you will leave some space. First, you will write to, then MNZ Limited, followed by A/C, which stands for account, and in the credit column, 30,000. So equipment account debit, and the amount in the debit column, which is 30,000. In the next line, you will leave some space, then write to MNZ Limited account, and in the credit column 30,000. And in the next line in brackets, starting with the word being, we will write the narration, which is being equipment bought on credit. And from whom are we buying? We are buying from MNZ Limited. Now let's read the next transaction. The next transaction is on January 8 paid MNZ Limited by check 30,000. Who is MNZ Limited? MNZ Limited is the business from whom we had bought an asset on credit. So the two accounts involved over here are MNZ Limited, and as the payment is made by check, therefore the second account is going to the bank account. So January 8, the two accounts involved are MNZ Limited and bank account. Now MNZ Limited is account of an organization, a business, therefore the rule for personal account is going to be applied to it, and the rule is debit the receiver and credit the giver. Here MNZ Limited is the receiver. It is receiving from the business 30,000. Therefore, MNZ Limited's account needs to be debited by 30,000. The second account is bank. Bank is also an organization. It is also a business. Therefore, the rule for personal account is going to be applied to bank. And here, bank is the giver. This is the business bank account which is giving money to MNZ Limited. Therefore, bank account needs to be credited by amount 30,000. So the two accounts involved are MNZ Limited and bank. To MNZ Limited, the rule for personal account is going to be applied. It is the receiver of money in this transaction. Therefore, its account needs to be debited. And the rule for personal account is going to be applied to bank also. It is giving the money. Therefore, it is the giver and its account needs to be credited by 30,000. Now, let's do the journal entry. So in date we will write January 8. The account to be debited is MNZ Limited followed by A/C which stands for account, and we will write over here DR which is a short form or an abbreviation for debit, and in the debit column 30,000. So MNZ Limited's account debit, and in the debit column 30,000. In the next line, we will leave some space. First, we'll write to, then bank, then account, and in the credit column, the amount 30,000. And in the next line, the narration would be written, which is B money paid to MNZ Limited. So MNZ Limited's account debit, in the debit column 30,000, to bank account, this is our credit entry, and 30,000 in the credit column, being money paid to MNZ Limited. I hope you have understood all the transactions. In case there is any doubt, you can leave them in the comment section below. So this video is going to be helpful to you whenever you're going to record entries of purchase of assets. And I recommend you to watch these videos at least 2 to 3 times so that you are able to understand the concept well. If you found this video useful, give it a thumbs up and subscribe to our channel. Till the next video, bye-bye.